Good morning, guys. It is Tuesday, October 22nd, 2024. This bathrobe business. I'm out of coffee, but I still have the news. So let's jump into it. I've been off for a few days just because work's been a little bit crazy, but I pretty much saved what I feel are the best stories over the last couple of days because I feel like they relate to more than just the news of the day. They have greater market trends. First story I'm going to share is about my favorite subject in the world. I think you guys know what it is. It's going to be gold. If I can get this stupid thing to share. Okay, so gold is hitting an all-time high again. So gold is at 2753 right now. That is a new record again, and the climb is continuing. So currently, it's still rising according to the day. It's probably going to hit 3,000 before the end of the year. It's got very little to go at this point. So as always, I recommend it. I think it's a good idea to purchase. I think this is one of the greatest hedges against inflation that nobody ever talks about. But that's up to you. Actually, I didn't check what crypto is doing. Let's see what crypto is for the day. Bitcoin is actually down a little bit, so it's at 66,874, but gold is up. So that's that. Okay, let's jump into the real stories of the day. So the first one I want to share is about retail. So retail sales increased solidly in September. So retail sales were up nationwide. Retail rose about 0.4% last month after an unrevised 0.1% gain in August. So we were up for August, we were up for September. Estimated rate ranged from a no change to an increase of 0.8%. Signs of the economy is resilient, likely will not discourage the Federal Reserve from cutting interest rates again next month. So this turns into a interest rate debate. Now, this is actually a good sign because we're seeing retail strong across all sectors, including another major sector I'm going to report on in just a minute. Again, this is good for the economy. I think there's also a lot of talk right now that the holiday season is going to be extra strong this year. There is going to be a good amount of discounting because both Walmart and Target have announced major discounts coming in the holiday season, which is probably going to start here in the next couple of weeks. Usually 2nd October ends. That's when the holiday season more or less begins. It used to be mostly between Black Friday and Christmas, but now they've kind of extended that to almost year round at this point. So overall sales are strong. That is actually really good. Next story, I guess I'll jump into the story I was going to save for later, but let's talk about General Motors. So General Motors is actually blowing past earnings. They had a monster quarter. So their revenue was 48.76 billion versus 44.59 billion. So damn, 3 billion over estimate. This is also the third consecutive quarter where earnings beat expectations, and they're planning for a strong fourth quarter as well. Fourth or third? No, I believe the next one is a their fiscal fourth quarter. So there's a lot to talk about here. Most of it is just from the U.S. sales. They actually saw a decline in China, which isn't surprising. China is definitely countering every reshoring we do with their own. So they're very competitive against our brands. So this is mostly a gain in the U.S. market, which is good because it shows how strong the U.S. market is. The only downside is it's also showing that car prices are still continuing to rise. So currently with GM, their average remaining car sales around 49,000. That's above the 47,000 that is the national average. However, as we've seen, prices have started to increase on cars once again, both with used and with new. And as those increase, that usually takes insurance with it. Now, I always make the argument that insurance is not a lagging indicator. It is a leading indicator. And I keep trying to find data on insurance premiums specifically to cars, healthcare, homes, etc. I have yet to find any current data. Everything seems to be back 6 months ago. So I'm waiting for that data to come out because usually, even though everybody likes to talk about how insurance is a lagging indicator, it's not. It's a leading indicator. Insurances do an extensive amount of research, an extensive amount of work of trying to preempt the market, of seeing where the market is headed. Because if they were always trailing, especially in an inflationary market, they would not be a profitable entity. Insurances base their estimates heavily on future sales, not on past. I'm sorry, on future costs, not on previous costs. So the second I find a good insurance number, I'll let you know, because that's really going to tell us the direction of inflation stronger than anything else. I've made the argument that inflation is still strong. I've used gold. I've used other assets, including right now cars as an indicator, but I think insurance is a very, very powerful indicator of where the market is actually headed, because it also takes into account repair cost. So, for example, for car insurance, repair cost is factored into that. So, labor, not just parts of getting stuff into the country, but the actual cost of getting it repaired. So that's that with General Motors. The other thing I wanted to share is General Motors actually investing 625 million in a joint venture to mine EV batteries raw materials in the U.S. I think it's a very interesting venture. A couple years ago, I remember when gas prices were through the roof. This is like before '08. A lot of companies were investing in oil manufacturers to try to bring the cost of gasoline down, just to make it more easy for them to manufacture their parts. And so now it shows you how much the market has turned, in that they're focusing on EV and lithium ion. Now let's talk about mortgages real quick. So weekly mortgage demand tanked 17% after interest rate hit the highest level since August. So this is kind of what we were expecting, that interest rates are not necessarily going to fall on the 30-year mortgage, simply because it's not just the prime rate that sets it. It's honestly more of the bond market that does. So we've seen exactly that. So increased to 6.5% from 6.36%. This is, of course, disappointing. This is something I've highlighted on the channel a couple of times. It's not necessarily surprising, but it's still impactful nonetheless. So applications for a mortgage to buy a home dropped about 7% for the week, and refinance demand fell about 26%. Next story I'm going to talk about is probably going to be Amazon. So this one is interesting. So I don't talk about this often, but I'm a huge proponent of nuclear energy, and it seems like AI is spurring massive investment in nuclear. That's all anyone seems to talk about, because for AI, you need powerful sources of energy. And so if AI does nothing more but develop more nuclear energy, I am all for it. So Amazon, and while Microsoft has talked about this as well, Amazon goes nuclear to invest more than 500 million to develop small modular reactors. Now, small modular reactors are still very much a new technology. They have not, as far as I know, been deployed in any real sense. So this would be a major step in nuclear energy, one that's greater than anything anyone's done in the last 50 years. If this works, you're going to see cities replicate this. You're going to see private companies replicate this. You could see a new golden age of nuclear if this goes through. But it's exactly what you think it is. So Amazon is investing 500 million in nuclear power, announcing 3 projects from Virginia to Washington. It's mostly for their AWS cloud subsidiary, has a massive increase net for clean energy as it expands services in generative AI. And every year, as we add more and more AI products, we're going to need more and more of this energy. So overall, I think this is a great story. I think it's a great direction to be taking it in. They are partnering with Dominion Energy, which I didn't know that they were in nuclear. I thought they were just natural gas, but apparently they are investing in nuclear as well. Last couple of stories I'm going to cover. These ones are just kind of fun. Actually, no, this is my last story. I'm sorry. This is about Chick-fil-A. So Chick-fil-A is launching their own entertainment company. So Chick-fil-A is launching a family entertainment app with animated shows, podcasts, and games. Chick-fil-A Entertainment.
At Capital Group, as one of the
So
world's
it's going to have
largest
essentially,
active asset
one second,
managers.
sorry, bunch of ads over here. Essentially, it's going to be an app that has a bunch of games, original content like cartoons, etc., for kids to play with as they're in the line or just anywhere at all. This is essentially the modern day version of a Happy Meal. I think it's a fantastic idea because the content is so much easier to produce than toys are. And I think kids will get more value out of it than a traditional Happy Meal. Now, I still love the idea of a Happy Meal. That's a core memory for childhood. But I think this is a modern day version. I think it's a very smart play as well. Any company that could do this, that can build brand affiliation for you when you're young, is going to be one that's going to sustain you well past childhood and adolescence. That's pretty much it. So those are the stories of the day. I hope you guys have a productive Tuesday, and I'll see you guys back here on Wednesday, tomorrow.